Hi, my name is Fan Yang, your Chief Currency Analyst here at ForexMinute.com. You're watching today's Forex video briefing. It is Monday, December 8th, and we're in the early part of the US session. The Australian-Japanese yen pair has been consolidating since marking a new high on the year at 102.84 in November. It has gotten into a range and is now pushing towards range support. Let's take a look at this chart to assess the technical developments. Looking at this 4-hour Aussie yen chart, we can see that there's a range roughly between 90.90 and 101.35. We ended last week with an attempt to break above 101.35, but it stalled. Price started this week retreating and is now pushing towards the range lows. Now, although there is no bullish continuation, we are sort of maintaining some short-term bearish momentum. Prices holding below the 150 period simple moving averages. So there's some short-term bearish momentum there and bearish bias there. We should still remember that this is a bullish market before the second half of November, when the market started consolidating. So because of the prevailing trend, we should monitor for support as price gets into approaches this range low. Okay, now even below the 99.90 area, there's a previous resistance pivot here at 99.70, and there's also the 200 period simple moving average just above 99.50. Okay, we should align now. We should look for buyers here, but we should also align any trade ideas to buy with an oversold for our RSI, meaning the RSI should be back around 30, preferably with a bullish divergence as we saw here late in November. So if we do see a bearish divergence here, with price dipping towards 99.70 for example, we should consider a buy. Okay, so let's say we put in a buy at 99.90, okay, and a stop below 99.50, let's say 99.30. That would give us a 60 pip risk. Now, our first target, we should limit our first target towards the middle of this range, okay, as the conservative target, and that would be around 100.50, which would yield us about a 60 pip reward, same as the risk. Okay, a slightly more aggressive outlook is towards 101.30 near the range resistance. Now that would yield us about 140 pips of reward from 99.90, which gives us a slightly better than 2-to-1 reward to risk ratio. Now, if price does not break back above 101.50, we should make sure to lock in some profit. If price does get up there but doesn't break above 100.50, then we should look for further downside with risk towards this November lows in the 98 to 98.50 area. And that wraps up today's Forex video briefing. Thanks for watching. Trade safe, trade well.